It is time to prepare to trade the best setups at the best prices. Going to be doing an in-depth price action analysis on the SPY, giving you the newly updated key levels of interest on where we're planning to trade at throughout the rest of this week. I'm going to be explaining to you step by step how to determine if it's going to be a bullish or bearish trend and the key levels of interest on where we're planning to buy calls to make money as the market goes up and buy puts to make money as the market goes down. Where to go long, where to go short, and where key trend reversals are going to be occurring. I'm going to walk you through step by step along with the strategies, break and retest, and break down and retest for puts, break and retest for calls. Let's get straight into analysis. So, in terms of the SPY, this is what I want you to be aware of heading into tomorrow. We are sitting at a key critical make or break level. The daily chart is signaling two possible outcomes. We're basically at make or break. One thing I want to make very, very clear though is this is going to be a future level. If it does hit this week, it would be even better. But this is going to be an auto buy level for calls, right? So 665 to 664, as you could see, resistance, resistance, massive breakout, resistance, massive breakout, floor, floor, massive upside, right? So this is going to be an automated buy level. Once the SPY hits 665, whenever it happens, I'm automatically buying calls. I'm buying calls. It should work. Vast majority of the time, auto buy levels work 9 out of 10 times. It should work. Set the profit stop, move the profit stop up higher, eventually get profit stopped out, leave some runners detached from the profit stop, aim for the bigger win on the runners, right? That's the game plan. In terms of this overall analysis, that is the number one trade idea once it hits, right? So once we do drop to 665, I'm telling you, we're all going long on calls. It's going to be a phenomenal print. Even if the market reacts bearish, even if it goes lower, it should have a nice bounce first. Even if it only bounces 1 point and the trend was still bearish, we would still profit on the calls because we set the profit stops. And it should go up a lot more than 1 points, right? That's just like a worst case scenario. And on that particular play, you could go a little bit further out of the money, but don't go too far out. But in this particular situation, we should have a strong bounce at 665 automated buy level for calls, right? It's previous resistance, it's a break and retest level, and everything I'm seeing on the daily chart is in full alignment within the bounce. So for those of you who are more beginners, or if you're just looking for the best level to buy calls, when it happens, that's where you're going to want to buy calls. It's considered the best level. So you can see once it reacts as a floor, big upside. Once it breaks out, big upside. And it's very, very likely going to really bounce towards this 664.60. That's the first game plan. If that happened, during market open, it could be an all-day potential bull trend. If that happened during power hour trading session, an hour before the market closed, it could be a massive print on calls. So keep that in mind. That is the best level throughout this entire video. Now, throughout this entire game plan. Now, let's get into the more short term price action and kind of what you need to look for, right? So, right now, during extended hours trading session, we are trading at 672 in terms of the previous closing price, not too far off, 67140. As you can see, looking at the daily chart, this is a key make or break level. This 670, 670, 670, right? Key make or break level. If it reacts bearish, then market starts to sell off to this key support at 66350 to 66450 to 665, which is the best buy zone to be buying calls. Literally right here. Remember, this is the best buy zone for calls. When it happens, we're all going long on calls. Whether it happens today, whether it happens, tomorrow, whether it happens next week, when it occurs, I'm telling you, this is going to be a major print level. I mean, if calls didn't print there, then it would literally have to print towards 661.50, and then the next level below that be 650 3 in terms of levels for call zone 655, right? But you get the point. This is the overall best range in zone for calls using break and retest, using key support, using daily chart foundation. That is your best range for calls. That's where you're going to really want to focus on calls once it hits. It's an automated buy level. So this is the only automated level in this analysis where you can just automatically buy calls. You go long once the level hits, you can scale into it and hold and set the profit stops and move the profit stops up higher, right? But in terms of the short-term analysis, this is what I want to bring awareness to. So If you look at this daily candlestick right here, take a look at this daily chart candlestick right here. Take a look at this daily chart candlestick right here. Take a look at this daily chart candlestick right here, right? Lots of similarities. So the previous closing price, basically the previous day lows, is going to be the make or break key level. You can see in terms of this particular situation, it gapped up, overall strong and bullish, kind of sold off into the close. This particular situation, it bottomed slightly below the previous day lows, overall bullish, and then sells off into the close, right? So, I mean, within this overall pattern, based off of how that is shaped and how that looks, the previous day lows are key critical. And the market is literally sitting at previous day lows in alignment with previous closing price. So, this could be a situation where, in terms of this trade that I'm talking out, I'm going to be watching futures very closely. But this could be a situation where, in terms of this analysis, with the current state of the market and levels that we're at, it could be a futures trade that is setting up, during extended hours, during pre-market trading session, right? So for those of you who are trading futures, whether that's with real money or whether that's with a prop firm, it looks like in terms of this overall move that's setting up, market's currently stagnant at previous closing price. If it keeps on sitting, it has to bounce. It has to bounce, right? So the daily chart pattern is signaling that at or slightly below the previous closing price to previous day lows, if it holds, we are supposed to see a strong bounce. So that is going to be your first bounce zone. If the market is holding above that, if we're getting green, red, green, bullish 30-minute candlestick confirmations, green, double, red, green, trend reversal 30-minute candlestick confirmations, if you're starting to see some break and retest, right? If market's starting to break above 672.50 to 673, breaking out, retesting, forming higher support, $1.50 above the previous closing price, you're going to want to be buying calls, right? So that is the first game plan. The first game plan is 671 and 673, right? 671 is your support, make or break. If it continues to hold, you can eye calls for a reversal. Now, one of the safest ways to play this is to just wait for it to begin to reverse and then get in on a break and retest. Your break and retest level right here is at 673. If market breaks above 673, goes to the next resistance level at 674, 675, drops back down, forms some higher support, or drops back down to 673, bullish 30-minute candlestick confirmations forming support, then you're going to want to go long at the break and retest level. So the falling knife reversal make or break level is sitting at 671. The break and retest level is sitting at 673, right? Now, in terms of upside potential and key levels that you need to be aware of, right? So that was the first overall game plan to keep an eye on. Make sure you're using confirmations, right? Because based off this daily chart pattern, it is signaling two possible outcomes. The first outcome is if the market gaps up, or if we turn 673 into support, break and retest, and we're holding slightly below the previous day lows, right? Previous closing price, then it's going to try to go bullish overall and then have a drop into the close, right? That's what it signals here. That's what it signals here. And we're a little bit oversold for the micro territory. And you could just see in terms of make or break pivot points as well. It's truly make or break. It's not just the daily chart pattern, but this right here, 670 is make or break. When it breaks out, it goes to 676. When it reacts as a resistance, it dips to 665, right? And you could see you have all this strong support at 665, which is where we would want to auto buy calls, right? 672 to 673 is not an auto buy zone. That's a falling knife trend reversal zone at 671, where if it starts to bounce and react bullish, you can try to go long if that's your strategy. Trend reversals, falling knives. Now, if you want to wait for a break and retest, then you can do both. I use both strategies. You got to know what kind of trader you are. Do you like the trend reversals or do you like the break and retest, right? But there's so much more to it than that, because sometimes even if you don't like a strategy, if the market has a certain momentum or if your intuition is in alignment with the price action, you'll make the trade even if you don't trade that specific strategy, because trading is more than just technical strategies, right? So anyways, that's what I wanted to bring awareness to on just this crucial key make or break level. The market's literally hanging on by a thread. Now, in terms of the other outcome that the daily chart is signaling, so this is the other potential outcome, and this is what I want to bring awareness to. A breakdown in retest level. So this is the other outcome. The other outcome is, so first of all, we should definitely have a drop. I don't think, like, even if we have a green bullish day like this, there should definitely be a nice drop. So another trade idea that I'm giving you is, if the market reacts bullish and has a bull rally, it's really going to try to have a bull rally at some point heading into tomorrow. That's what all these daily chart patterns are signaling, that the market will try to have a bull rally. If it's not at the previous day lows, it's at 665. So if 670 free falls and reacts bearish, you know, if your strategy is to buy puts towards the lows, you can try it if it reacts bearish, right? Just remember it could flip. But if it really starts going under that 670, we're going to 665 and then we're auto buying calls at 665. Even if you had a loss on calls at 671, you should be able to be profitable with a 50% win rate if you know to trade far out of money 0-day options by buying calls at 665 for the trend reversal. You can be extremely successful trading 0-day options with a win rate as low as 30%. Even with a win rate as 50%, you could be extremely profitable because the percentage gains always outweigh the percentage losses if you hold the trades for big wins, know how to time them, know what far out of the money 0-day option strikes to select, right? And add to winners. You add to winners to double the gains. You set the profit stops to protect your profit so you don't go green to red, right? Most you can lose on a trade is 100%. Most you put in is max risk per trade. Most you can make on a trade is unlimited profit potential. We've had 2 trades this week where we made over a 1000% return. Due to math, it's a numbers game. So, anyways, with that being said, you know, what I want you to understand is the daily chart pattern is signaling that there's going to be a drop. So if the market goes super bullish and has a bull rally, that's what's expected. It's either going to happen at 670 or 665. So again, if the bull rally doesn't happen at 670 and we start falling through, you could try to put. Really wouldn't encourage it, but you could try it. But just understand, there is supposed to be a bull rally tomorrow. If it's not at 671, then it's at 665, right? So you give things some time, look for the confirmations, look for the reactions. If it just blows through 669, then that's free fall territory. So look, this is what I say. If you want to do puts below 669, if you want to do calls 665 automatically, if it reacts bullish at 671, that's the trend reversal level, right? If you're looking for the break and retest level, 673, right? So 673, 671, that's the holding knife, holding make or break zone, right? Above 673, super bullish, hold 670s, overall bullish, right? Now the cliffhanger, or if you want to do puts, what I would recommend is this. If it reacts bearish below 670 and starts forming lower highs, reacting bearish, right? If you're seeing it's forming lower highs, it's starting to react bearish below 670 and it's starting to go below 669, then you can try your puts at the lower level, write it back down to here, and then you play calls for the reversal, right? And then if the market holds this range, if the market's forming the floor above this range, holding support, you could try to buy in at the trend reversal, falling knife, if that's your strategy. And again, it's not just strategy, it's based off of other things on how you trade too, not just strategy, right? It could be something with your intuition, could be something with momentum that you see, could be certain patterns on the, 30-minute chart, 1-minute chart, 5-minute chart, right? But if the market's just holding this range and starting to form bullish 30-minute candlestick confirmations above 672.50 and then break above 673, then you're going to want to be call focused, right? Just understand the market is considered a bullish bull rally as long as it's holding above 670. If we go below 669, that's when it snaps, right? So there's really no reason to really try puts at higher levels in this make or break bullish range. With puts, you're actually much better off just going with a clean break of 669 rather than trying to predict or use confirmations at higher levels, because even if you get in at a higher level and it does crack 669, there's the probability that it's going to try to reverse. So it puts, the most logical thing is to go with clean breaks. The clean break level for puts is below 669. The clean break level for calls is 673. But before you do the calls on 673, be a little bit careful. Make sure it's been holding support at 671 to 672. Make sure it's been forming those 30-minute bullish candlestick confirmations, right? So look, we're just in a crunch. That's what you need to understand. We're in a crunch, and as traders, all we really have to do from the call side is just determine if the market is holding, stabilizing, breaking, retesting, forming higher support, forming bullish 30-minute candlestick confirmations for some time between 670 to 673. And then if it starts to prove itself and starts to break out a little bit above it, then we go long, and then you can also try to trend reversal, right? But for puts, it's a bit more simpler. But just understand, as long as we're above 670, it's considered bullish, but that doesn't mean we just buy calls because it's considered bullish. It just means it's holding the ground. And as something's holding the floor, you give it some time. You look for trend reversal 30-minute candlestick confirmations. You look for some break and retest. You look for some higher support on the 30-minute chart, on the 1-minute chart, on the 5-minute chart. You look for some bullish signals. You give things some times. And if it's holding that long enough with bullish signals, then at some point it's got to break out, right? And then when it does break out, you could also play the break and retest, not just the trend reversal. And for puts, it's far more simple. Puts heading tomorrow is far more simple. If it just goes below 669, then I would just hit puts, right? So for calls, I'm telling you to use more confirmations. It's a trend reversal. It's a falling knife. There is supposed to be a bull rally, but the bull rally is either going to happen at 670 or 665, right? I mean, if there's one thing we're certain, once this hits 665, it should definitely fucking fly. But if we're just maintained above 671 to 673, we're going to have a very nice bull trend for calls. And then if we just snap below 669, then you just hit puts, right? So if you listen to this information, you should bank, man. I'm telling you, if we go below 669, hit the puts. If we hit 665, hit the calls. In between 670 and 673, it's considered bullish. But just because something's considered bullish, just because something's hanging on by a thread for a long time, doesn't mean we buy calls. So if it's hanging on for some time, that's a bullish signal. If it's forming bullish 30-minute candlestick confirmations, bullish 30-minute trend reversal confirmations, that's a signal. If it's breaking out and retesting, forming higher support, maintaining above 672, no longer going back to 670 to 671, that's bullish. If it breaks above 673 and if it's held long enough, it's like, dude, at some point, you got to go long, you got to get on these calls because you're going to miss out on the bull rally, right? That bull rally at 665 might not happen until, it could take some time, right? So the point being is we're at this make or break level right now. A bull rally is supposed to happen and the market's just sitting here. So if it keeps on sitting and we start breaking up 673, we're all going long. And then if it goes below 669, we're all going short, right? So that's the overall main game plans. Now, these are the last two trade ideas, man. So in terms of the last two trade ideas, this is what I want to bring awareness to. Is very important. Even if we have this bull rally, which is supposed to happen, either 672.3 or 665, right? It's supposed to fucking happen. Either way, if it happens, you should be successful with a 50% win rate. Like I said, if you went long at 673 and lost, if you go long at 66, put it this way, if you went long in the morning at 673 and you lost 100% on the trade, your max risk per trade, say you put in 2%, you lost 2% of your account. If as long as we get the bull rally, you'd actually make more money if it went to 665, because if it dropped all the way to 665, that would likely take closer to power hour, right? When calls are cheap, decayed, worthless, then we get a strong bullish rally into the close. Crazy profit on calls when they're cheap, worthless, far out of money with a big move for a trend reversal at 665, right? So that's another thing you need to understand is perception. If I went long at 673 in the morning and I would actually prefer, let's say there was going to be a bull rally. So if there was going to be a bull rally and there was confirmations here, even if there was confirmations and I went long, I would actually prefer to lose on that trade as long as I got a bull rally the same day at 665, because it's not about the win rate. The percentage gains tend to be a lot bigger during the power hour session when the calls are super, super decayed on a downtrend and it's due for a bull rally reversal. So that's another thing you got to understand with trading, with zero date options. In certain situations, when a trader takes a trade, they would actually prefer to lose on certain trades they take, because if they do lose, it creates an opportunity to make a much bigger gain. But the reason why they still take the first trade is because their system works regardless, and it's going to be a massive win regardless when it prints, right? There's no reason to sit here and say like, we're not going to dabble and sit here and say if it reacts bullish at 673, we're not going to go long because the best level is 665. No, we're not going to do that. This whole 50% win rate or whole trying to trade the absolute perfect set, because the bull rally is going to happen regardless, right? So again, I'm just trying to explain to you some things so you can think differently on how, far out of the money zero date options trades. I've been in certain trades in certain situations where I would actually prefer to lose on a trade, because if I lost on the trade, it would actually set me up for a better trade in a bigger percentage return, right? But we still take that trade regardless, because the system works regardless, right? It doesn't rely on the win rate, and it's still going to be a massive print. I'm just saying, like, if I went long at 673 in the morning, you know, I'd much rather be long at 665 during power hour. That's what I'm saying, man. Like, the power hour trades have the biggest prints. We hit two trades during power hour um this week where we made 1,000%. Even G-Roar said it last week or 2 weeks ago. He literally said, it's like, dude, G-Roar was like, man, I'm thinking about just trading during power hour only, because he's sitting here looking at we're looking at the results, and we're saying, dude, these power hour trades make 1,000%. The trades before that, like 200%, 300%. Like, it's more rare to see a 500 to a 10x play during the market open and during the middle of the day. I mean, if you see it at market open, you got to hold that throughout the entire day. If you see it during the middle of the day, it's not long as a hold. But power hour, within 1 hour, 30 minutes, 15 minutes, you can make the biggest percentage gains, and it's the cheapest, lowest risk. Literally during power hour, you can have like 2, 3 losses in a row, all 100%, and then make massive gains on the one that prints, right? But with our strategy, we tend to have extremely high win rate with our trades. Obviously, our highest win rate is our green to red ratio, meaning we rarely ever have red days, because the percentage gains outweigh the percentage losses. We size in accordingly, risk management 101, and we add to winners, which doubles the wins. And we win a lot bigger than we do in terms of the losers. When there's a loss, it's 100%. When there's a win, it could be multiple 100% to 1,000% plus, right? And adding to the wins doubles that gain, making those losses so small where the win rate doesn't even matter. But we do have a high win rate. But our highest win rate is the green to red ratio, where we rarely ever have red days. So we're sitting at green 95% of the time on our green days, and rarely ever red. So with that being said, man, this is the last thing I wanted to cover within the analysis. It's going to be very important. We need to discuss more short opportunities, right? I gave you the short opportunity where we go below 669, but you need to understand the short opportunities with this bull rally. So, first things first, if we have the bull rally, the market is supposed to give back some gains. So, heading into power hour, right? If the market had an overall strong bullish move, whether it occurred at 670 or 665, right? What's supposed to happen is it's not gonna try to close strong. This is what it's supposed to try to do. It's supposed to give back some gains. You see it, give back some gains, give back some gains, give back some gains, give back some gains. So these give back gain signals are going to be later throughout the day, or during the power hour trading session, preferably during power hour, right? So a couple things you need to look for. Say we have a nice crash during the middle of the day or at market open, right? If the market retests the highs of the day, or if it retests a major resistance level during the power hour, even during the middle of the day, and it's signaling bearish, but especially during power hour, the easiest way to do this, for those of you who are more beginner, is the power hour. If the market's just sitting at a key resistance level, an overextended level where the market had a nice drop during the day, it's going to be a strong signal for puts, especially during the power hour. If you're doing it during the middle of the day, be very meticulous. Use red bearish 30-minute candlestick confirmations. Be more careful. You're going to need to be more professional. Look for a breakdown and retest level where market cracks support, had a big pullback, spike back up to retest, starts to drop up during the middle of the day. Could happen twice. Could happen during the middle of the day and during power hour. Preferably, the main one would be during power hour. And even if you try during the middle of the day and lost on that one, the one during power hour will make it all back and more, right? Just understand, if we do get this bull rally, the market's going to try to get back some gains. In terms of times, you need to be aware the best time for that would be during power hour, right? So it's either going to be during middle of the day or power hour, or both, right? If we get the double to triple top. So be aware of that and look for the play on puts, right? So that's another trade idea I'm giving you. Now, the last trade idea is going to be a breakdown and retest level. So at some point, the market is going to try to drop. So look, I'm going to give you the breakdown and retest levels, right? Because even with a bull rally, it's going to try to drop at these levels first before it pushes higher. So this is key. Oh man, this is so key. Look, this could literally be the highs. This could be considered, yeah, heading into tomorrow, this could actually be considered um so this would be automation. This right here is automation automatically buy puts right here. It's a breakdown and retest level right here. That had the breakdown, had the retest during extended hours. Key resistance has not been tested during normal trading hours. The strategy worked during extended hours. Look, red, green, red. You see that red, green, red, bearish, 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 lower highs, previous support, breakdown, retest, lower highs, right? So you need to be eyeing puts 679.80 to 681. This is going to be your put zone right here. This is all puts. This is your best level for puts. This is your best zones for puts, man. Look for confirmation, but you could really start auto buying like above 680. You could just start auto buying this. Phenomenal zone for puts. Best price for puts heading tomorrow. Now this is your lower level. There is one more level. It's a lower zone. The market should definitely try to drop at this zone. This right here. This is going to be 677 to 678. This is your zones, all right? So I am seeing signals on the daily chart as well, where even if we do react to bullish at 670 and break above 673, it's gonna try to pull back at 677, right? So this zone is puts, this zone is puts. One thing I want to make clear, this zone is gonna try to drop first, but the market could push higher later throughout the day to this zone and then sell off during power hour, right? However, this zone, it's gonna be extremely hard to push above this heading into tomorrow. So this is your best zone. This is a great zone where the market should drop even if it pushes higher. But I just want to make it very clear in terms of measures, movement probabilities, it would be very unusual for the market to push above this heading into tomorrow. But it has a high chance, if we stay above 670 and break above 673, to drop first at this zone initially, right? But then push higher. So just keep that in mind. This zone for puts, very unusual to push higher. This zone for puts, gonna try to drop first, just like this zone drop first, except this one, market's gonna try to push higher to the next zone. So that's a strong zone for puts, man. If you're wanting like absolute best level, this is phenomenal. Look at it, 677 is 678, 678, 680, 681, all put zones, man. Look, that game plan that I just given you is money. This is the best game plan I've seen throughout December. It's phenomenal. It is brilliant. I'm telling you, we are going to print at the speed of light heading into tomorrow. It's going to be another phenomenal green day, man. I'm telling you, you use this game plan, you use this key level, you use this information, you use the strategies, confirmations I teach you, and you apply yourself to everything that you've learned throughout your training. You give this your all. I'm telling you, you will have a phenomenal green day tomorrow. It's so simple. These are the simplest levels. It's the simplest game plans. It's going to be a phenomenal day. Wait for the confirmations. Look for the breakdown and retest below 669 puts. Look for the break and retest 673 calls if we're staying above 670. Look for the breakdown and retest puts 677 to 678. Breakdown and retest puts 679 to 681. Look for end of day sell off. Market has bull rallies. Look for the bull rallies 670 to 673, 665. Look, man, we got the best game plan in the market. Do you understand? This is the absolute best game plan, the absolute best levels. Every single trader watching this video tomorrow should be green if they apply themselves to themselves and use this information. I'm telling you, you guys are going to bank. You guys are going to bank. You guys are going to print. Everybody's going to be green. You're going to love it. You're going to absolutely love it. Now, one pattern that I want to bring awareness to, and this does reflect the daily chart pattern as well. So take a look at this, man. I want to show you some potential outcomes here. Look at this, man. This is what you need to be aware of heading tomorrow. So you see how we're just kind of like gradually going up. Then we have this sell off. Then we spike. This is a breakdown retest level. You see how the support, sells off, retest, breakdown, retest, sells off, bullish end of day recovery. You see this, man? Look, the same pattern is occurring. And this is why you guys got to be aware of this. This is so important, man. So in terms of what happened, this is very key, man. Take a look. I want you to focus on, man, just look at it. Think of this as a mirror, right? You're going to trade this. You're going to trade the reflections you see in the mirror. Look for the patterns, look for the confirmations. This is all a mirror, right? So trade the reflections, trade the confirmations, wait for similarities, patterns to repeat on the 30-minute chart. 30-minute chart is the best signal for candlesticks. If you're looking for the trades that give you the biggest wins with farther money zero day options, strongest foundation is literally that 30-minute chart. You can also try more macro time frames. You could try 1 hour, 2 hour, but the best mix of a nice scalp and a hold and just tends to work best in terms of trading 30-minute chart. So take a look at this. We have this, you're going to see right here. So take a look at this. Market is gradually, okay, you see how we're gradually going up, head into tomorrow. This is a pattern you need to look for. December 12th up until December 16th. Gradually going up, right? Market sells off, support, market goes below support, market goes below support. Then it starts to reverse. This is why I'm saying the most likely out for those of the futures traders, man, these futures traders, they need to be watching to go long at 670 if it reacts bullish. And then if not, they go long at 665. So simple. If you can't be profitable with a 50% win rate, I would say you're trading the wrong asset class. That's what I would say. There's certain asset classes, there's certain strategies where you need a high win rate because you get in, you get out, you win small wins, right? Got to size in bigger to make something on small percentage wins, right? So they're trading the wrong asset classes. They're using the wrong systems. But if you trade farther money zero options, you will see you could be extremely successful with a 50% win rate. Very, very simple. So I'm telling you, the market is going to try to have a bull rally. And this play that I'm speaking of is going to occur during the pre-market session, very, very likely. So look, right here with this overall pattern, see how it gradually goes down, see how it gradually goes down, see how it sells off, see how it sells off, see how it cracks support, see how it cracks support. Then look, it has the bull rally. Take a look, it has the bull rally, right? So it's got this bull rally and it went from 676 all the way to 682. And what did my video tell you? My video told you that the market was going to bounce at 676, written in the title, bull rally 676. Look at this. This is a bull rally 676, the exact close. The market went all the way to 682. And then look, it hit again, 676, went lower, bullish recovery 681. That bull rally level worked for extended hours traders, who trade futures, right? And it also works for normal a trading hour session. You could have went long right here, been down, hold the trade, no stop loss. We don't use stop losses. Max risk trade you put into the trade, boom, profitable. That 676 bull rally level made you money. And that video that I posted also said 687. The market's going to crash at 687. Look, the exact peak was 686. Just shy 1 point. Just shy 1 fucking point. So, I'm telling you, man, this is getting ready to happen. You guys need to get ready for this for the bull rally. You need to get ready. If it's not at 670, it's at 665. That's where this is at. So the market's due for a bounce based off this overall pattern. If you look at this pattern, the market is signaling a bounce. If you go long at 670 and you lose, you go long at 665, make it all back and more. This is a probabilities game. This is all a numbers game, man. If you can't be successful with a 50% win rate, you're not trading forward money zero day options. You're full porting. You're sizing in too heavy, and you're not winning big. To win big, you need to hold the trades. You need to make bigger percentage gains, and you need to add to winners. Adding to winners double triple the gains. How do you increase your position size without increasing your risk? You add to a winner instead of profit stop. That way you get profit stopped out. You don't go green to red, right? If you add to a loser, you increase your risk of losing. If you add to a winner, you increase your gains. But to protect it, you got to set the profit stop, right? And to set a profit stop, you got to be green. And to add to winners, you got to be green. So look for the trend reversal and then look for the breakdown and retest because the market is signaling bull rally and then another drop. So last time, if we measure the move, 676 to 682, right? There's a 6-point move. So if we go with the levels, say it bottoms at 670, 671, where was the breakdown retest level? Look, This is your best zones. Now, this is another level. This one you got to be careful with. I'll give you one more, but be careful with this one. You got to be careful with this. You got to be very seasoned professional to trade this one. But look, this is a lower level for the put zone. It's a lower level to keep an eye on for the put zone. 676, right? So since we went below our bull rally level, that worked out phenomenal. 676, you keep an eye on it for puts. The point being is, if the market has this 6 point plus bull rally, 6 point bull rally, it's gonna try to crash. 676, 677, 678. Phenomenal zone for puts. Hit the puts. It'll try to drop first. Look for red bearish 30-minute candles confirmations. And then if it pushes higher, this is the absolute best fucking level for puts, 680 to 681. Again, this could end up being the best level for puts. You need to pay attention to puts at 676 to 677. So that's the name of the game, man. But that lower level I was speaking of was right here. It was at 675.50, right? So again, if the market has this bull rally at 670, there's gonna be a drop first in between the zone of 676 to 678. That's where the drop's going to occur, right? You don't have to be exact precise with these levels. Just look for the confirmations, right? And it's going to try to drop first when the levels are tested first, even if the market pushes higher. And then if the market hits this, that's just phenomenal put zone, right? So look for the bull rally reversal. Since we're oversold, if we free fall below 669, you could try a put. Not 100% the best thing to do, but you could try it because it's a clean break level. And if you just set the profit stop and it has a nice little drop, you should be able to make profits on that, right? And then we should have this bull rally. The least likely outcome is that we don't have the bull rally, right? Sometimes the least likely outcome ends up happening, but it would be very, very unusual. But even if we don't have the bull rally, I told you, if we go below 669, hit the fucking puts. There you go. If we go below 669, hit the puts. If we don't, stay away from the puts. Look for the call opportunities. Then look for the put opportunities 676, 678, 680, 681. If we go below 669, you can try to hit the puts. If we hit 665, hit the calls. I'm telling you, if you use this information, you are going to be green if you're disciplined and you size in accordingly. Risk management 101. So, anyways, that's everything you need to know, man. I'm telling you, you use this, you're going to see. These are the best levels in the game. These are the absolute best levels. If you use the information, wait for the clean breakdown below 669, look for trend reversal at 665 for calls. And then if we hold above 670, look for the break and retest at 673, look for the puts at 676, 677, 680, 681. Look, it's all money. It's all money, man. It's all fucking money. You got to know when the market is going to have quick reversals before it reverses, because by the time it already reverses, it's already too late. That's why I'm telling you, man, certain levels, you don't even need confirmations. Like, it's just destined to drop first at this zone, at this zone. I do encourage confirmations, but sometimes by the time the confirmation hits, it's already too late. And you get it at a much lower price, but you could still, take the meat of the move, which is fine. But there's just certain levels that are distinctively designed to drop first into bottom first. In 665 heading into tomorrow, that is designed to spike first. 676 to 677 is designed to drop first. 680 to 681 is designed to drop first, right? And then 670 to 673 is our hanging on a thread bullish zone, where if it keeps on reacting bullish, we're going long. Then we're looking for puts to the higher levels instead of the crack below 669. So that is the game plan, man. You use this, you'll be green at the speed of light. And then you'll be questioning why you aren't in our group if you're not in it. Because all we do is print. It's unlimited printing, it's unlimited winning, non-fucking stop. So that's the game plan. I want you to use this game plan. I want you to apply yourself to it. I want you to trade levels. I want you to see for yourself, heading into tomorrow, how predictable, how lucrative trading can be if you apply yourself to the right system. And that's for the money 0 to 8 options at our levels using the curriculum. You'll print nonstop. So with that being said, that's the game plan. Use the game plan. You're going to print. You're going to absolutely love it. I'm telling you, you're going to be in shock on how well this works tomorrow. If you apply everything I said, you'll be like, man, this is fucking genius. Like the market's actually predictable. You got to give some things some time to play out. Certain levels you just automatically get in. Like I said, automated level 665 calls. Market should drop first at 677 and 680 for puts, and clean break below 669. You could try to puts, right? Um, I've given you absolutely everything to be profitable heading into tomorrow. It should work. If you just listen to that, you should be absolutely profitable. And if you buy the right strikes, you hold the trades, you set the profit stops, you move the profit stops higher, you add to winners. That's the overall system. Now let's get into, so I'm gonna quickly show you what we ended up doing today. So that's the game plan. Use the game plan, you'll print. And in terms of our secured private organization, Team Roar, as you could see, this is what ended up happening today inside of Team Roar. And then the day before that, it was 5 for 7. We had some massive wins. Look at this. This was the day before. This was on Tuesday. Look at this during Power Hour, man. I'm telling you, the Power Hour trades. Listen, for those of you who are in Team Roar, you need to keep your focus on these Power Hour trades, man. If you're ever red before Power Hour, the Power Hour trades will bail you out and get you to very green. But I'm telling you, these are the best trades. The best trades occur during Power Hour. They're the cheapest, lowest risk with the biggest upside potential, right? In order to hit a massive win during market open, you got to hold it for a very long time, and it's not going to yield the same gains as Power Hour. During Power Hour, the contracts are cheaper and they yield bigger gains, and it happens at the speed of light within minutes. Sometimes a couple minutes, sometimes 10, 20, 30 minutes. So look at this. 6810 SPX puts. This is the real-time alerts, option chain, all alerted real time. This is our system. 3:53 p.m. 6810 SPX puts for 165 cents. 165 cents on these puts, and then look, they go straight to 1100. We got in at 160s. It bottomed at 75 cents, and then look, it goes straight to 1100. This is why you got to trade during Power Hour. These moves right here happen within minutes during the Power Hour trading session. And as you can see, they are the cheapest, lowest risk contracts with the biggest upside potential, right? So you got to focus on trading SPX during the Power Hour trading session with the levels, with the overall curriculum. As you could see, this is why win rates don't matter. You could buy a contract at 75 cents, trade don't work, you lose your maxers per trade. You can keep on losing on a contract, and then all of a sudden one goes 1,000%, you hit. But that's not what we're doing. We actually have high win rates doing this. You could be very profitable just trading during Power Hour with a win rate as low as 30%. If you're adding to winners, it could be as low as 10 fucking percent. I'm telling you, when you add to the winners, that makes the win rate even non-existent. Like if you hit 1,000%, you can have 9 losers in one winner and still be up 100% and still be fucking green on the day, right? But if you add it to the winner, it doubles the gains. It just wipes out the fucking win rate. It's like the win rate isn't even a fucking question, Like I should 1,000% return. You could have 9 losses. You're profitable with a 10% win rate. But if you add to the winner, it's like the win rate doesn't even fucking exist. There is no fucking win rate. Like the win rate doesn't even matter. You add to the win to double the gains, right? So I'm showing you this is what we do, man. I'm not gonna go over all this. You got to be in Team Roar to experience all this. But look, as you can see, it's massive wins, man. Again, this was on Tuesday. 6820 SPX calls for 110 cents. This goes this was 6820. Look at this. 6815 SPX calls for 185 cents. 6820 SPX calls for 110 cents. Are you seeing this? And then look at the trades. 30 cents to 520. 20 cents to 300. Are you seeing this? And then look after that. Dude, who was doing this? Let's be real here. Look at this. Okay, look, here's look, I'll show you this, man. Look. So look, all before that, look at this, man. All before that, wins and L wins 675 puts for 50 cents. Add to the winners, triple the position size. 100 cents, 123 cents, puts up 150%. Like you seen this, it's unlimited fucking win, unlimited fucking print, dude. You need to get in here. Use that game plan. You'll be green. Use some of the profits. Join here. You make more profits. It's unlimited fucking winning. Losing is a personal choice every single day. And you finish the week green. 675 SPY puts for 50 cents a contract. Added at 49 cents. Added at 59 cents. In the money, sold at 121 cents. Add, triple the position size, triple the wins. 150% return. 100% loss. Don't add to losers. 150% win, triple the size, triple the gains. What loss? What L? Even when we have L's, it's not losses. They're so fucking small. It's like, dude, we could have so many L's on the day. One win will wipe them all out. We can have so many L's, yet we're still green on the day because big percentage gains outweigh small percentage losses. If you're wondering what a small percentage loss is, 50% to 100%. Very, very small. And the most you can lose is 100%. The most you can make is unlimited fucking percent. You can make so much percentage that YouTube and people will flag and report the video saying that it's misinformation. I'm like, dude, did you go 50 points out of the money during power hour on SP fucking X and the trade went in the money at the speed of light in 10 minutes and make a trillion fucking percent? Didn't fucking think so. It's like, dude, people don't understand. There's something real. There's something great. There's a cheap, low asset class that can make people rich, you know? And it exists. There's something real out there that actually fucking exists. I know a lot of people are looking for it. We have it. Look at this. 6815 SPX calls for 185 cents. 6820 SPX calls for 110 cents, right? Not all the trades are going to win, you know, but for the vast majority, our trades print. Not that we need them to. We could have tons of losers on the day. We'll still be green because the gains always outweigh the losses. So look at this, man. 520, 300 a contract. Who the fuck do you know does that? Does all of this, you know, has this 6815 SPX call 185 cents, 6820 SPX call for 110 cents, goes up 520. Look at these 1200% fucking returns from the lows, 1000% returns from the fucking lows. And then look, a 6810 SPX put for 165 cents, all the way to 1100 cents a contract. You guys seen this, man? Look at these fucking results, man. These emojis fuck. It's unlimited fucking win, unlimited fucking printing. 75 to 1100. Who's winning that much, that big, that consistent? 6810 SPX puts for 165 cents a contract. Sold at 1,000 cents a contract. Risking $165 to make $1,000. Dude, you could lose on that trade all day. When it prints, you'll make it all back and more. And we win. We fucking win. It's unlimited fucking. I just showed you four. What other group? Who else can you name of that wins this much, this consistent, this big, with the best 0 to 8 far money option system? A system where small accounts can actually grow in a cheap, low risk way. 5 for 7. That was on Tuesday. This is what you guys missed on Wednesday. As you can see, you get updated key levels, where to go short, where to go long. The game plan was fucking brilliant. Go short below 679, 677, 676, 675, 675. For those of you who want newly updated and different perspectives, first link down below. It's all in the description. Morning game plan updated, you know, at market open. And red X is the neutral zone where we're not looking to potentially trade during that zone. Follow risk management 101. Not going to be going all over this. Like I said, we have a real-time 0 to 8 option trading alert system that makes a lot of members a lot of money. It's the first link down below. As you can see, this is what we did today. 530 Tesla calls for 60 cents a contract. 674 SPY puts for 49 cents a contract. Added at 59 cents. As you can see, the trades print like fucking crazy, man. Have you seen this? 674 puts at market open on 59 cents a contract, right? Look at this. SPY's selling off at the speed of fucking light. Everything that was drawn here happened. It all fucking works. It all fucking prints. It's unlimited win, unlimited fucking print. 674 puts for 49 cents a contract to 74 cents a contract. Tesla calls at 61 cents. Tesla calls at 74 cents. Tesla calls at 14 cents. You set the profit stops. You don't go green to red. It's unlimited win, unlimited printing. Tired of getting stopped out? Don't use a stop loss. Buy something that's cheap, low risk, that has unlimited profit potential. Put in your max risk per trade so you can hold it. If it drops 200%, most you lose is your max risk per trade if the trade expires or if this goes to zero. Most you make is unlimited profit potential. The wins are bigger than the L's percentage-wise, and also because we add to the wins. Dude, we eliminated this delusion that people think a win rate matters. I'm sitting here saying, dude, a win rate, anyone with some money inside a Team Roar, I don't even think they track a win rate or give a fuck about a win rate or even look at a win rate. Because they're sitting here saying if we just follow and trade the systems, it's a probabilities game. We add to the winners and the percentage gains are bigger than the percentage losses. So if we just take all the fucking trades, it's unlimited fucking printing. It's like We got rid of the win rate. The win rate doesn't matter. What would it matter if we have, let's say, power hour, right? Let's say we had 4 losses during power hour. Oh shit, people are red. People are fucking whining, bitching, complaining. Red during power hour. 4 losses in a row. Make a trade. 300% win, 400% win. Maybe it's 1,000% win. Add it to the winners, double the gains. It's like, dude, the win rate don't exist, and we win a lot. We're not sitting here saying, I'm not telling you this, but it's not. I'm not trying to say like, the reason why I'm telling you this is so you understand we don't need a high win rate, but we actually have a high win rate. Not that we need that. We don't need that at all because we add to winners and the gains are so fucking big compared to the L's. The most you can lose is 100%. The most you can lose is your max risk per trade, which you put into the trade. The most you put in is your max risk per trade. If you want to put in more than your max risk per trade, you got to add to winners. If you lose 1 hour multiple, you lose your max risk per trade. 2% of your account, 1% of your account, 3% of your account, right? The bigger the account, the less you can risk if you like. But if you add to a winner, you can add another R multiple, 2 to 3 R multiples, triple the position size, but you're not risking that because you have a profit stop that protects you from going to green and red. 675 puts for 47 cents a contract. Add, 100 cents a contract. Like, look at the fucking results, man. Like, are you seeing this? Look at this, man. Who's winning this much? Come on, let's be real here. Who's winning this much? This big, this consistent. 674 SPY puts for 49 cents a contract. Add. The puts printed like fucking crazy. 675 SPY puts. Yeah. Why have 1 win when you could have 2? Why have small wins when you could have big wins? Why not add to the wins instead of selling for small wins? It's like, dude, we broke the system. Don't you like? We left the system. I'm like, dude, I left. I'm unplugged. We escaped the matrix. We all left the system. We're out. We're all fucking free. Like, I'm trying to show, like, 675 SPY puts 47 cents a con. Another, like, don't you get? It's financial freedom. We all left. We all left. We're free. We all left the system. We're out of the matrix. And what we chose was this. We made a decision, and the decision was this. The cheapest, lowest risk way for unlimited printing, where everyone can fucking print. Small accounts, large accounts, everyone can fucking print. With the best system, cheap, low risk, far the money, zero-rated options, unlimited profit potential. The most you can lose is what you put in. Your max risk per trade, 100% of the trade. The most you can make is unlimited profit potential. You add to the wins, double, triple the gains. Like, dude, we left the system. Our traders, we don't talk in win rates. We're like, dude, what's a win rate? All the traders, they ain't worried about that, dude. Our traders, they're not sitting here saying, oh, lost. They don't bitch. They don't bitch. They don't whine. They complain. They don't worry about losses. They're sitting here saying, dude, when's the next trade? We could have 3 losses in a row. They'll be like, dude, when's the next one? So be like, and it's gonna hit up fucking 1,000%. Like, when you're good and when you're good at what you do, you'll see, man. The fucking it's like, dude, we'll have if we ever had a losing streak or something, they'll be like, when's the next trade? When's the next trade? We'll always bail them out. It's like, dude, they're never in a situation to be bailed out because the wins always. It's like if they just fucking trade and they have some capital, you'll see it's unlimited win. Look at this, 120 cents, 140 cents, 166 cents, 40 cents, 266 cents. Man, who do you know is winning this much, this big, this consistent? Man, look at these fucking results. 675 SPY puts for 47 cents a contract, added at 62 cents a contract, sold at 152 cents a contract, man. Another win. It's like, dude, two wins on puts isn't enough. Third time's the charm. We need another win. 670 SPY, like, if you're the best, why not just keep winning? Why not just keep winning? We're going to win so much. People are going to hate us for winning. We're going to win so much. They're going to say, dude, there's no way someone could win that much. I'm trying to explain to them inside of Team Roar. You gain access to a real-time zero-day option trailer system, G-Roar, where you can win unlimited fucking trade nonstop. Look at this. 670 SPY puts for 44 cents a contract, dude. Add, triple it, goes to 60 cents. 44 cents to 60 cents. There you go. Not every gain is going to be unlimited massive potential, but that's a quick 35, 40%. You set the profit stops. Ideally, when you're up 10, 20%. Then we had a loss. After all the wins, we had a loss. Does it matter? No. And the reason why losing doesn't matter, especially after wins, is this. As you keep trading, you scale down. you scale down, but you should be taking accordant size during power hour for the most part. You should be taking some risks, taking accordant size during power hour. But as you keep on trading, you scale down. You take smaller size, you scale down, and you make sure that you never go green to red. The most you get back is like 30% of your gains. If you want to be super risky, 50% of your gains. It depends on the day too. Some days people might want to risk more, then go for half. Most days risk like 30% at the most, right? So if you have a loss and you get back 30 to 50% of your gain with one loss, couple losses, whatever it is, whatever it stops at to hit that bracket, you got to stop trading because you're never going to go green to red when you're already green. Because when you're inside a team roar, the goal is to be green every single week. For the most part, you should be green every single day. Maybe you have one red day, but for the most part, once you get the hang of things, once you adjust to our real-time zero-day option trade alert system, it's a completely different way of trading. You got to hold the trades, no stop losses. You got to get used to holding the losers because we have so many losses. 7 out of 10 times when a trade drops 50%, it comes back to life and goes green. And that's very unusual for someone to hold a trade when it's down 50, 60, 70, 80, 90%, and it comes back to life 7 out of 10 times. Most people use a stop loss or they use the wrong broker who auto exits their positions, usually past 3:30 p.m. Got to watch for that, right? Make sure you're using the right broker like Schwab, Thinkorswim, Interactive Brokers. Use a broker that's designed to day trade, zero-day options. And when you're trading them, use hotkeys or use a stream deck. Getting in and getting out is the most important part. Execution, profit stops, automated, clicking a button to enter to exit. Very, very important when trading zero days. You need a reliable platform to do that on, and you need the right tools such as a hotkey or a stream deck. So we had a loss on calls. It doesn't matter because everybody knows, the most you risk is 20 to 50% of your gains. And for the most part, we usually are green before there's any losses. So therefore, if you took the first trades, you're supposed to take the first trades, right? You shouldn't flip green to red. For the most part, we're usually green first, right? So if there's ever some losses on the day, and when we make a bunch of trades on the day, of course, there's going to be like 1 or 2 L's. It's very unusual if there's not like 1 or 2 L's. If we make like, 8 to 12 trades on the day, some days there's like 4 trades. Some days there's like 8 to 15 trades. It fluctuates, right? Every single week, there's usually like, 15, 25 trades. But 6750 SPX calls for 120 cents. This was another L. So look, we had 2 losses on calls, right? So you had 2 losses on calls, but then take a look, right? So you had 2 losses on calls. It doesn't sting because everyone was already green before that, but there was 2 losses on calls, right? So obviously if someone took those 2 trades and they gave back half their gains, right? Then they can't trade anymore because that's the risk that they chose, right? So the prices of the contracts. They're usually below 50 cents a contract. On SPX, they're around 150 to 200 cents below, sometimes like 75 to 50, right? The prices of the contracts, the risk, and you can get started with one contract, right? So take a look. We had 2 losses, right? Now look at the wins. Look at the upside, right? 6720 SPX puts for 110 cents. 6725 SPX puts for 195 cents. 6730 SPX puts for 180 cents. You see this? Puts 3:36 p.m. Puts 3:32 p.m. Puts 3:36 p.m. Puts 3:51 p.m. All on the same side. Puts to go down, right? But all different strikes at different times. Look at this. This is the power of trading the trend. You don't need to be right first. You don't need to time it perfectly. You just need to be right about the overall trend and hold the fucking trades. 6720 SPX puts for 110. 6725 puts for 195. 6730 puts for 180, right? Look at the fucking results. 6720 puts, 110 cents to 210 cents, right? So if you go to 620 puts, where we were in at, as you can see, everything's loaded real time, right? You could trade with us in real time. You can check the option quotes. You could check the option charts. Everything is real time with what we do. 6720 puts for 110 cents. Trade went from 110 cents to 210 cents. There you go, 90% plus, right? 6725 puts, 195 cents to 510 cents. 25 cents to 510 cents. You see this, man? Look at this. 6725 puts, 6720 puts. Look at this, man. Look at where we were in at, right? Sometimes we're not going to time everything perfectly. And one thing you need to understand is with zero dates is when you trade during power hour, timing is crucial in terms of the most massive gains. To make the craziest gains, you need good timing and good entries. But as long as you're right about the trend, you could buy multiple strikes And as long as you're right about the trend, multiple strikes will be green. But as time fluctuates and as you get better timing and entries, some of the strikes are going to be much bigger percentage gains than others, right? So 6, 7, 20 puts, 110 cents. Look at this. This trade, 110 cents, right? This went all the way down to 10 cents. You seen this? All the way down to 10 cents. Our trade dropped at 90%, and then it went up 210%, 210 cents, right? So don't use stop losses, set profit stops, get profit stopped out. 6725 puts for 195 cents to 510 cents. Look at this. 25 cents. This dropped all the way down to 25 cents. You seen this, man? 6725 puts right here, 195 cents. We were in at fucking 200. Look at this. It dropped to 25 cents. Trade the trend. Don't use stop losses. Look, the trades go in the money. 510 cents. That's a profitable trade. That's 150%. Imagine if you would have bought the lows. Oh man, imagine if you would have gotten in at 20 cents. Big difference. 20 cents, 25 cents. Look, we're not going to time every trade 100% perfectly, but for the vast majority of the time, we win and we're right about the trend. And this is the beauty of what we do, because as you can see, these are all wins. And as we keep on winning, we win bigger. If the trend is bearish and we're in at 110, it goes to 25, then it goes to 210, we win. If the trend is bearish and we're at 195 and it goes to 25 cents, then it goes to 500, we win. And then as we keep on doing this, as long as the trend stays within our favor, eventually we're going to time it perfectly if we don't the first time. Sometimes we time it perfectly the first time we get the best entry. Sometimes it takes a couple of wins to hit the big one, and that's what it took in this situation. But they're all still fucking wins. 6, 730 SPX puts for 180 cents, right? You go to 6, 730 puts for 180 cents. Look, drop to 70 cents. Another 50% trade, 185 cents. Who do you know has a system where you could be down 90%, hold the trade with proper risk management, you put in your max risk per trade, no stop losses, and the trades still go up 100% and buys multiple strikes on the right side of the trend as they're down? You understand? That's fucking conviction. That's fucking conviction. These trades dropping 90 fucking percent, man. This trade's out here dropping 90 fucking percent. People are fucking quiet. Some people are fucking talking shit, bitching, whining, complaining, whatever the fuck. Some people are worrying. Some people don't understand. They just joined a fucking group, whatever the fuck, right? These trades are dropping 90% at the speed of fucking light. All of a sudden, this ash that we bought, perceived as worthless, goes up 150%, 200%. And yeah, we know if we would have timed it perfectly, precisely, it would have been bigger gains. But you know what? That's 4 fucking wins. And look, we start to time it better as it goes on. Sometimes we time it better perfectly, right? It's not an exact fucking science, but if there's one thing that's an exact fucking science, if you trade the trend, you can buy a fuck ton of strikes during power hour as they're getting more decayed, and one of them is going to be timed perfectly. And the other ones are still going to fucking print. And the one that's timed perfectly is going to go up a fuck ton more than other ones, but they're all still fucking wins. And you add to the winners and you add the gains. You've seen this, man? If you're wondering, like, William, what's the glitch? What's the cheat code? What's the glitch? What's the jailbreak, right? What is it? It's power hour. That's what it is. It gives you unlimited options. Power hour is the best time to trade. As you can see, it's all in power hour, man. Look at this. You could be entering trades going down 90%. They come back to life. They go green the speed of light. You could be entering trades that go up 90%. Then you enter more. Time them perfectly. They go up a fucking 1,000%. It's like, dude, the answer is to trade. If you want to get better at trading, you got to trade. So if you trade with us, you're going to be trading a fuck ton and you're going to love fucking trading. I'd say it's the realest group on the fucking planet, man. You will not find a more realer, better group who trades for hard money zero-rated options. Why trade for hard money zero-rated options? Well, let's see. They're cheap. They're low risk. They have the biggest upside potential. You add to the winners and you just have profit stops. Never sell the losers. If they expire worthless and go to zero, well, you lost your max risk per trade. If you trade another asset class and set a stop loss, well, you lost your max risk per trade, except you got stopped out and you didn't hold the trade. And if you held the trade and you traded the trend like we do, it would have came back to life. And also, if you just trade the fucking trend, you'll be like, dude, oh, I entered a trade, oh, I'm down 90%, I'll hold it coming back to life. Oh, I entered a trade, I'm down 90%, I'll hold it coming back to life. Oh, I entered a trade, oh shit, this one's at the bottom of 1,000%. Oh, and trade, oh shit, is 1,000%. It's like, dude, y'all need to wake the fuck up. Get in our group and print the speed of fucking light. Who the fuck does that shit, man? Like, what the fuck, dude? 6, 7, 25 puts 195. 6, 7, 30 puts 180 cents. Fucking All of this winning, like 6, 7, 20 puts, 110 cents. My gosh, man. Look at the fucking, look at this, man. Look at this. If that's not the company that symbolizes fucking SPY, like who runs the fucking market? Who runs the fucking SPY? Like who's the fucking goat to this shit? Like if that picture right there doesn't symbolize what the fuck we are, then what does, dude? Who is a better fucking photo than this shit? Like look at this shit, man. This fucking this is the spider. This is literally like this is like fucking SPY right here. Spider. It's like, dude, we are really the fucking company, the fucking brand. Like we are that. We are the fucking ones. Like, who's the best trained spy? Zero doubt. We have it. There's no fucking debate. Any other group, any other trade, nobody. Fucking nobody, man. You guys are a part of a fucking legacy. You guys are a part of the best zero-day trading group on the fucking planet. We got the best levels. We got the best curriculum. We got it fucking. Oh, we got the best system. Look at this, man. Look at this right here. You see this little spider? You see this fucking spider shit? Look at this. Spider, market sells off. Look at this. Look at that photo. Map this out. Look at his daily chart. Look at his symbol. Now look. We got it. Trying to explain it. We fucking got it, man. Fucking got it. Look at this. 6, 7, 20 puts right here. 6, 7, 25 puts right here. Oh my gosh. Look at these fucking puts. They're getting fucking wrecked. They're down 90 fucking percent. Oh, fuck. Oh, the trend. Oh, fuck. Unlimited fucking went, dude. SPX dropped how much? From 38 to fucking 20? 18 fucking points? Bro, nobody. Fucking nobody. No, nobody. If you guys aren't in Team fucking Roar, you're fucking up, man. Like, nobody. Dude, look at this fucking. And then look at this. Right? That's the icing on the cake. Like, the third time's the charm. You know, all the people doubting, worrying, talking shit. Like, maybe they're new to the system. Or maybe, it's just something psychologically, right? Or maybe they're adjusting, right? People have emotions. People have. Like, you guys need to understand our group fucks, and we're the complete opposite of everyone fucking else. Like, that's why, like, we don't fuck with other groups, other people, like, because, like, no one's like us. We're just so fucking different. We fuck with our group, our energy, like, we're the fucking guys, man. Like this like look at this shit, man. Like fucking the bearish M, the fucking spider, puts, decayed, fucking destroyed, down 90%, right at the fucking peak. The third strike, 6, 7, 30 puts. Oh my fucking gosh. These fucking YOLOs are fucking YOLOing to unlimited fucking profit potential. It's like, dude, look at the fucking results added. Oh my gosh, look at these fucking trades, man. Look at this, man. 6, 7, 20 puts for 110 cents. Sold 200 cents. 6, 7, 25 puts for 195 cents. Added 125 cents. Sold 500 cents. And then, oh my gosh, the fucking. Oh man, this is just. That's legacy right there. The third trade was the exact peak. 2 trades that were held down 90%. Full fucking conviction. The third trade, 180 cents to fucking 930. Buys at 180, sells at 930, fucking 500%. Let's be real, man. Who fucking prints like us? Nobody. Nobody fucking prints like us, man. My gosh. Big shout out to G-Roar for absolutely fucking crushing it, man. The L's are irrelevant, and the reason why the L's are irrelevant is because the percentage gains are bigger than the percentage losses, and we add to winners. Adding to the winners just throws the win rate out of the fucking question. You know, we could sit here and say, we can have one win 200%, and then you know we can have one win at 200%. Actually, no, let's do. We can have one win at 1,000%, 9 losses at fucking 100%, and still be profitable with a 10% win rate. Win rate doesn't fucking matter. We already had 2 trades this week. We're made 1,000 fucking percent, right? We can have fucking we can have 1 loss and 1 win, but the win is bigger than the loss because we add to the fucking win. Doesn't even have to be fucking percentage wise. Oh my gosh, we could have 2 losses and then 150% to 200% win, but we added to the win. Doesn't It's like, dude, we can't be stopped. Do you understand? It's undeniable. We can't be stopped. We can't be shut down. They can't fucking stop us. They're trying to. They are trying to. There are people out there There are groups out there. They're trying to stop us. There are companies out there. They write shit on my comments all the time. They do whatever the fuck, right? People are trying to stop us. But the key word is they're trying and they're failing miserably. You know? Over here, it's unlimited fucking printing, man. I'm telling you, dude, there's people that are trying to shut down every fucking thing. My channel has 2 strikes now. We are at 2 fucking strikes. One thing I do, one thing I say, this channel could be completely fucking gone. But you know what's not gone? Unlimited fucking winning, unlimited fucking printing. 0 to 8 options train alert system. Team Roar. Me. Our existence is unlimited winning. And if you want to trade alongside us, it's the first link down below within the description. Unstoppable, undeniable, fucking titanium. Can't be touched. Dude, fucking nobody. Nobody. Nobody fucking, like, man. Who the fuck? Team Roar, G Roar, William, Trader Society. Who? Fucking nobody, man. Absolutely fucking nobody. It's the first link down below in the description. You use this game plan, you'll see for yourself. You come in here, you'll be fucking shocked. You'll be like, dude, how do they win that much? How do they print that much? How can someone win and print that fucking much? It's unlimited, man. The results, they speak for themselves, man. I'm telling you, we got a lot of traders, man. Look at this. Only bought a few YOLO contracts. Wish I went heavier. 35 fucking thousand? $35,000. Only bought a few fucking YOLOs. I'm telling you, we got a lot of big fucking accounts here, dude. Fucking pregnancies going on. Like, we got shit going on. We got shit popping. You understand? Fucking nobody's popping like us. It's the first thing down in the description. You're gonna see it's unlimited fucking printing, man. 367. Should have stayed out. Lost $201. Missed it. Yo, what the fuck? Rah. The fuck, man? You're supposed to roar. The fuck is this shit? Someone was up 360 and they went fucking red? What the fuck is the point of being up? What the fuck is the point of being up if you're gonna go right back down? Why not just stay down? Like, what the fuck, man? The point of being up is to stay fucking up. The fuck? If you want to go down a little bit and then go fucking higher, fine. But the point of being up is to keep fucking going up. The fuck? We're not trying to fucking reach our highest version of ourselves and then come back fucking down and then go fucking lower and be like, oh, fuck, I want that fucking version back. No, fuck that. We hit our highest version. If you got to come back down a little bit, you come back down a little bit and then you go fucking higher. The fuck? I mean, at some point, when something goes up, it has to come down. But dude, you guys got to be the highest versions of your fucking selves. Green to red is unacceptable. This is Team Roar, man. This ain't some other group where you could just sit here and go green to red. No, this is Team fucking Roar. If you fuck around in this group, you will get clapped. If you fuck around in this group, you will lose a fuck ton of money. You know? There's the mirror works both ways. You can have a massive fucking green day, and then, or you can flip green to red. How do people flip green to red? They keep trading without risk management. Okay, I'm up $200. Okay, the next trade is $50. So if I buy one contract, I give back 25% of my gains. It's already gone. That's how you have to think. You have to think that the money's already gone. You already lost, you know? But you could sell it for a massive profit. You could set a profit stop. You could add to winners. The way you got to trade options is you already lost the money. It's already gone. It's already a loser. You know, as soon as you enter the trade, you already lost it. It's gone. Because we don't use stop losses. So if you don't win on the trade, it's worthless. It's zero. So you put in your max risk per trade, but the example I'm trying to make here is, all right, let's say trading. All right, I'm up $200. Up $200. Next trade's $50. If you take it, one contract is 25% of your profits. 2 contracts is 50% of your profits. So then you have to make the decision on this one trade. Are you going to risk 25% or 50% of your gains? If you risk 25% of your gains, you can make one more trade. If you risk 50% of your gains, you can't make another trade. And you also got to keep in mind, power hour is the best time to trade. Green to red is unacceptable. Every trade you should reset and you should adjust your size and adjust your risk management. It's as simple as that. You know, you start off with a max risk per trade. This is the most, and you should have a set amount of money on how much you're going to risk for the day. How much money are you willing to risk for the day? And then what is your max risk per trade? You don't necessarily have to have the first one, but you should have some sort of number in mind where, like, you're not going to go below that number. But the point is, you have a max risk per trade, right? So you take some risk, say you're green. All right, you're green. You hit the goal. You can walk away. If you choose to keep on trading, that's on you. So if you choose to keep on trading, the most your risk is like 25, 33%, 50% at most of your gains, right? So if you're up $100, you make another trade, that's it. That's literally it. And then if you win, then you could make more trade or size and however you want it to fluctuate. You got to visualize how you want your chart to look like before you enter the trade. What is this going to put me in, right? If you're up $100 and then you risk $50 and then you make another $100, now you're up $200, right? So what do you want to look like? You just went from 100 to 200. Do you want to risk 100 and go back to where you started, or do you want to pay yourself for that previous trade and now only risk 50, right? If you're up $100 and you risk 50, you're still green. And then you have to stop trading. If you're up $100 and then you know, you made $100, you're up $200. But to make that last trade count, the most you can risk is $50. Because if you risk 100, you're back where you started. You have to see, scale it accordingly. If you want to be more aggressive, take bigger risks than power hour, but don't go green to red. But that's another thing. Traders don't understand the domino effect. If you made $100 and you make one more trade, you risk $50. You're still green if you lost. Good. But if you made $100 and then you make another trade and you make another $100, you're up $200. But if you risk $100, you're right back where you started. So what was the point? What was the point of going from 100 to 200 if you're going to go right back to 100? What was the point of that? What was the point of that? You have to define that. If you're going to do that and not just risk 50 and then stop at 50 at 150, then what's the point? Oh, well, the point was I wanted to take two trades. I wanted to take bigger risk during power hour. You have to define that. What I'm telling you is power hour is the fucking gold mine to this fucking shit. But you have to make your trading count. Always make your trades count. I'm up $100, I'll take a trade, I risk half my gains. I'm up $100, I take a trade, I make another $100, now I'm up $200. I'm going to make it count, risk $50 more most of the day. If you want to push it and accept the risk and not make it count, but try to make bigger gains, then you risk $100 and try to make crazy fucking gains, right? But you get the point. Make your shit count. And if you're not going to make your last trade count, make sure that the reward is worth the risk. Make each trade count. If you're not going to do it, make sure that the reward is an unusual reward, that it's bigger then it's a big opportunity where you're okay with going back to where you started from that previous trade that you made that got you more green, right? Sometimes that's the right thing to do, but this is more of a conversation for small accounts. Medium sized to large accounts don't have to worry about that. They just keep on fucking trading. All a large account has to think about is what's the next trade. That's really about it. They have their systems. Small accounts have to be more advanced. They have to be more careful with going green to red because they keep on hitting, they rack up, $50, $100, couple $100, $1,000, and all of a sudden they get this high fucking head and they start giving back gains, they start having multiple losers, they don't track the risk management, they don't make their trade count, and boom, they give it back like that, right? Look at this, man. Fucking phenomenal results. 150% return on 6700 SPX puts, um 670 puts 40%. I don't even think these were the strikes that we took. If they would have taken the strikes that we took, they would have made a lot more. This was a strike that we took, 674 puts. Yeah, see, look, there's no fucking comparison. What is it? I'm not sure what time they entered this trade, but 700 puts. We were doing 720 puts, and all the other puts they were going up multiple 100%. Look at this. This one's up. Well, this one's up accordingly, 150%. This one's only 40%. The 670 put, right? Make sure you guys are doing our strikes. Our strikes tend to be the best. If you want, you can try to do your own thing and you see the results, compare. But focus on what we're fucking doing, man. If you want, you could backtest your own shit and gain experience that way on what you're creating. But like, focus on our systems, man. 674 puts, 214%. QQQ 606 puts, 123%. 700 puts. There you go. There it is. 281%. There it is. There we go. So that's phenomenal work. Big shout out to KJ3. There we go. So he's killing it. That's what I love to see, man. Look at this. This guy's fucking killing AMD, SI's fucking massive gain, 8+850. Dude, everybody's fucking killing it, man. So look, it's the first link down below in the description if you want to trade alongside us. With that being said, I'm going to be signing off. We have a big day heading into today. It's going to be fucking phenomenal. We're going to be fucking printing. Oh, would you look at that? What is the market doing? Oh, the market's having that bull fucking rally, man. Would you look at that? Damn, those future traders, man. They're getting ready to print. So I'm signing off. I will see you guys within the next one.